Good afternoon, everyone, and welcome to the Talk Sense Show. I have today a very special guest out of the US. Her name is Maureen Murad. She is an attorney and corporate and securities lawyer. She's also a professor at UNH School of Law, and she's a principal at Crowdfunding Advisors. Maureen, welcome to the Talk Sense Show.
Thank you so much, Prem. I'm happy to be here with you.
Fantastic. Thank you so much for waking up a little bit early for me to look and talk about basically regulations within the US, how to raise money under the present law. But more importantly, before I start off, I just wanted to talk about a little bit of retrospect, what has been happening lately. So if you look lately, a couple of things have happened in the last couple of years. One of them is the Jobs Act. The Jobs Act is basically about crowdfunding, where a lot of people have worked on to do crowdfunding from retail investors in the, as I call it, the retail market. You're able to allow to do a raise up to $1,070,000 US. You've been also giving lectures on this for the last couple of months. What has been the reaction, and what kind of people come to your workshops to learn more about crowdfunding?
Yes, so the Jobs Act, specifically Reg CF, did become effective in May of 2016. So it's a little over 3 years old. I think in terms of doing the master classes that we've been doing the last few months, like you said, a lot of people are coming in. They're mostly startups, they're mostly small businesses, but they probably might not have a lot of revenue, or maybe they're still trying to figure out what their market is or what their product is. And so those are the people that are attracted to our classes. We also have folks who are already in business, right? And they are making revenue and they are ready to scale, but Reg CF, because you can only raise $1,070,000, it's like a smaller step as opposed to going, another route, which might be like the traditional, private equity or VC route. So people are maybe a little wary of going that route, and going the Reg CF route seems a little less intimidating. Our last workshop, I did it at my alma mater at the University of District of Columbia, David A. Clark School of Law, and we had a couple lawyers in the room, right? And they wanted to know how to help their own clients who were looking to raise money in this way. So we get a variety. What's also been nice is that people have traveled to come to our classes. So the one in DC, someone came all the way from San Antonio, Texas. And then the one in New York, we had someone come from Ohio and someone come from Connecticut. So I think in terms of getting the information out there, people are very interested.
Fantastic. I mean, it's good to hear that you are teaching other lawyers
Right.
what Job Act is all about, or what Reg CF is basically all about. It's really, really good to hear that. And if you look at startups in general, if you look from the VC side, if they get $50,000 funding or $100,000 funding, these kind of checks are regularly put in by VCs to start up basically a lot of companies. Is there a reason why this cap of $1,070,000 has been given specifically under this Jobs Act?
That I am not certain of, but I do know that in terms of, if you compare the Jobs Act cap to other countries and even other states, because some states have their own crowdfunding rules, it's actually very low, right? So most places like Germany, I think you can raise up to $8 million now. I think at one point it was 5 million. In France, you can raise 5 million. So, and in certain states, like in DC, if you use their specific crowdfunding rules, you can raise $2 million. In Georgia, I believe it's $5 million. So technically the Reg CF cap is kind of low. And there have been people, trying to get into Congress's ear to raise the amount, because depending on what you're doing, the $1 million may not be sufficient. What's good about Reg CF though is you can raise that $1 million within a 12-month period. So if you raise $1 million in a 12-month period, the next 12 months, you can go back and raise another $1 million if you need it, or if you feel like the crowd can sustain that. So at least you can use that regulation more than once. It's not just a one-shot thing.
Okay, so if you heard the word crowdfunding, I usually think about Indiegogo and
All right.
Kickstarter, for example. But obviously, there is something different with this kind of crowdfunding when it comes, where product-based kind of crowdfunding, as we can see on Indiegogo or Kickstarter, than doing something in this space. So, can you tell me some nuances which are different from these, I would say, product-based platforms versus doing it under the Jobs Act?
Sure. So as you mentioned, Indiegogo, Kickstarter, and platforms like that, those are considered rewards-based crowdfunding. So that means when you give funds to this particular business, you get some sort of gadget or product or something in return, but that's all you expect in return. You don't expect that, when they make all this money that you'll get a part of it, right? You are just helping them get along by buying their product first. Sometimes the deal will be if you donate, or if you give $20, you'll get a mug. If you give $50, you get a t-shirt, or maybe you would be one of the first people to get that product that they're creating. Under Reg CF, the Jobs Act, what you are giving in return is equity or debt. So on the equity side, that means when you take on investors, these retail investors who are giving an average of maybe $250 or $500, they are getting equity, which is equivalent to ownership interest in the company. It's a very limited, ownership interest, and it's a very small amount, but nonetheless, they get ownership interest in the business. And then when it comes to debt, the investors are essentially lending you this money, and the rate at which you are borrowing this money is blended across the different investors. So you make a payment to them every month, or sometimes there are income sharing or income revenue sharing agreements. So like once you start making money, then you pay a percentage of your revenue to those investors because they loaned you the money. So, and in that world, you are essentially issuing or offering securities, which is a regulated way of raising capital.
Okay, and somewhere a 12-month window. And is this 12-month window that you're able to go into the retail investor market and solicit basically to raise the money? Or, because I mean, if you look at it, if I want to make a product, at times it can take 2-3 years basically,
right,
before a product is ready to go to market. How is this married to each other, this 12 months raising period versus that, at times it takes longer for teams to develop something?
So the 12-month period refers to the amount of time in which you can raise that $1,070,000. It doesn't speak to what the product is or when you would have the product ready for market. Some people who are in the Reg CF, who are raising money via Reg CF, already have a product in the market, or it's very soon going to launch. If you're not at that point yet, that is something you have to tell your investors before you start asking for money, right? That this is the anticipated timeline for when you expect your product to launch. I like to say that if you are going to take on retail investors, regardless of what type of retail investor, you should treat retail investors and accredited investors the same. You would never take money from an accredited investor and not tell them your timeline, right? Or when you expect things to be done. So you should treat retail investors the same. And so that they are informed about what they're getting into. A lot of times the retail investor is also not affirmative. They're not really clear on how this all works, right? And so that means you, the company or the issuer, have to help the investor, the retail investor, become more informed about how this works, and that when they invest, you know, they're not going to get their money right away. It will take some time.
Okay.
If they do at all, right?
Yes. So, I mean, if you look right now, for example, in the US, interest rates are quite low.
Mhm.
I mean, are there also rules that, you know, if I issue a loan to under the crowdfunding Reg CF, that there should be specific interest rates or anything, or is that free? That, hey, I want to make a loan at 20% per annum, which is extremely high.
Right.
From, you know, looking at interest rates generally, or if I would go to a bank to loan my money, would it be allowed to do it at such a high interest rate, for example?
Well, generally, the median interest rate is between 8 and 10%. So it's not as high as the 20%. And yes, you're right. There are rules against predatory lending, right? You can't charge 300, 500% on loans. So there are those limits there. The issue with trying to get a loan from a bank when you're a startup or a small business is you might not be able to meet the requirements or the criteria of the bank. You probably haven't been in business for 2 years. You might not have revenue. You might not have tax returns yet. So all those things work against you when you try to go to a bank. And they don't necessarily work against you when you go to the crowd.
Got it. Got it. And what you're saying obviously is that, you know, if let's say it's 8 to 10%, then if you're on the higher side, the 10% again, it's easier most probably getting your, of course, if your product appeals to the public,
Right.
to fill in basically that loan versus then, you know, saying, hey man, I'm able to, I want a loan, but I want it at 4%,
Right.
will be not that well accepted.
Right. And most businesses who are doing the debt route, they also have revenue, right? They have revenue projected. So some of the best examples of using debt crowdfunding is for someone who needs the money to maybe finish a manufacturing, you know, job. And so they're going to come in, or they might already have a client lined up. They're just waiting for a specific part of the product, and then it can go to market, they can get their money back, et cetera. Or that they're, you know, high growth, so that means monthly they're able to show that they're making money so that they can pay the investors back.
Yes.
So it's a different type of business.
Yes, yes. And do you feel that this Reg CF is very, very popular right now? I mean, having feet on the ground, are you seeing that, you know, startups especially are really looking into this kind of route, or are they still looking at different routes like traditional, just doing private equity, you know, going into a VC fund and trying to get negotiating a deal out of there?
I think we're trying to get the word out. I don't know if it's popular yet. I think part of the reason is because, like you said, traditional ways of raising money is still the most sought after way, and you see that a lot. And or either you go the VC route, or maybe you go through angel groups or something like that. But that's the reason why we do these master classes, to help get the word out that there are alternative ways to raising money, and it doesn't have to just be one way. And it doesn't have to be one or the other. I mean, we've seen successes where people go and raise money via Reg CF and then become more attractive to VC investors because they're able to show that they have a market for this. You know what I mean? So it can be helpful.
The swords goes both ways in that matter.
Right. That's true, because there are some investors who don't want to deal with companies who've had, you know, who raised money via Reg CF too. So
I got it. And I want to make a bridge right now, because one of the things you said that about 2-year audited, you know, financials. This is something which is kind of like a requirement if we look at what happened, for example, with Blockstack.io, which is the first, as far as my knowledge goes, and please correct me if I'm wrong, is the first Reg A plus under Reg A Plus announced capital raise, which has happened just recently. As far as I got it, it was 23 million US dollars they raised in total, but they did it under the Reg A Plus, and of course it was applauded by everyone who is, here for the long term to stay. This way of raising money has been really, really good. I mean, Blockstack, just to give a little bit of background, had some VC rounds, a product which is running, revenues which are running, as I said, more than maybe 2 years or maybe more than 2 years kind of revenues, audited financials to share with the public, and then came out with this capital raise.
Right.
So, I mean, how has it been? How's it been welcomed out in the US?
I think one, because they are offering, a security token attached to it, that has been popular as well. And because they had to do a Reg A Plus, which is Title IV of the Jobs Act, you have to go through the SEC, the Securities and Exchange Commission first, right? They don't approve what you're trying to sell, but they will qualify it, meaning, okay, you can now go out onto online or to the public to raise these funds. And so being able to get qualified for it was a big deal, because the SEC, up until I think they got qualified in July, they had not qualified anyone, right? No one could make it past past that application point. So I think that alone just shows the perseverance of Blockstack and their attorneys, and the fact that they probably had some, because they had the VC rounds ahead of time, they had the funding to, to support this effort, right? To back this effort. So not everyone will be able to get through it, mainly because it just costs a lot of money in legal fees and CPA fees and all that to even get across the line. But I think that because they've been able to do it, it kind of serves as a roadmap for anyone else who might be interested in going that route. And you don't necessarily have to issue a token in addition to getting qualified, because the SEC has not qualified campaigns that had no token attached to it, right? So that's not necessarily the point. I think in the cryptocurrency blockchain world, that's like a good selling point, but generally speaking, it might not matter too much. But in terms of them being able to raise all that money, I think the issue with that is, and I'll play the devil's advocate just for a second, is that, to your point, they already had VC money. They had funding. So I feel like when we think about crowdfunding, we're really supposed to, I think the idea behind it was to really support, true small businesses, startups who are really just trying to make it, and they don't necessarily have all the funding and the connections that a bigger company might be able to garner. And so they use the crowdfunding to kind of get their product or their service or their good out to the market and to raise money that way, as opposed to, large companies like Overstock and all these other companies who are creating their tokens, and then they're just out there and they immediately pick up, all the hype and the celebrity around it. But with that said, I still think it's great that a company was able to get through, because now you can see that there is a pathway, right? For a long time, people were like, we're not going to deal with the SEC. The SEC doesn't understand, etc. And I think, they've made some strides in that world, right? They've definitely tried to work towards understanding this new market, this new type of asset, and they're trying to find ways to, ensure that investors are protected, and that's their main goal, right? To protect investors. So absolutely. I think it's a good thing.
Yeah, that's one of the things that at some level investors need to be protected, and having a regulated way only ensures that this position would be kind of taken care of by going this regulated way. Now,
right.
Before, last week, if people wanted to do a digital securities offer or token offering, the only way was actually looking at Reg D or Reg D 506C, where you're able to do a raise with accredited investors at that point of time. And now with this Reg A Plus, it gives now retail investors the opportunity to participate because my retrospect basically the IPO route has been, people know it's very, very cost intensive to do such a raise, but a raise of 20 million US dollars has been not existent for a very long time right now. If it is a raise in IPO, it's usually of 100 million plus.
Right.
So this corridor, which is now kind of opened with the Reg A Plus, that you have this niche of 20 to 30 million US dollars. I think it's maximum 50 million you can do under Reg A Plus.
Yes.
So
Yes.
this niche between 20 and 30 million, which is like a sweet spot to have enough capital to boost your company into going to the next phase of growing it, really makes sense. And looking at how the SEC has been quite difficult till July this year, it's really interesting to see that how this market is slowly trying to evolve as it is right now.
No, I agree. And I think the good thing about even Reg CF and Reg A Plus is that it's open to retail investors, but accredited investors can invest as well. So it's kind of like, they're almost on equal footing in a way, right? In terms of what the terms are and all that, because the terms have to be the same for accredited and non-accredited investors. So I think it helps, amateur investors also become more involved.
All right. So,
Yeah.
Maureen, I want to, before I let you go, I just want to understand one thing more. I mean, with Crowdy Advisors, you are giving a workshop very, very soon. Maybe you can share with us what this workshop is about and what people can expect if they sign up for it.
Sure. So we call it the Equity and Debt Crowdfunding Masterclass, but we're changing it to something simple like raising money for your small business or startup. Our next masterclass is on October 19th in New York City. And in the class, we give you a workbook which gives you information about the different types of crowdfunding, so Reg CF, Reg D, and Reg A+. And then we also have we have a journal part, and we also have portions in there where you get to determine like what your budget should be. We also have a pre-launch checklist that tells you all the things you might need before you launch your business. We also have different areas that help you deal with, like if there's an issue and you need to be able to tell your investors or tell your supporters. We also have parts about marketing, because that's a major part about crowdfunding. If you can't get the word out to people, then your campaign will not succeed, right? But yes, so our next class is October 19th. If you are in the New York area or you want to fly to New York that weekend, you can go to www.crowdyadvisors.com to sign up. If not, you can also purchase the workbook on its own if you're not able to make it to the class. That's also on the website.
Fantastic. So just before I let you go, Maureen,
Yes.
who will be the people, the lecturers, the professors available to teach us all this?
Yes, so it will be me, myself, Maureen Murat, and also Samson Williams, who's with Axes and Eggs. We tag team that course together. It's all day, so it's from 10 a.m. to 4, and we tag team the different topics and go through the workbook with you. And then there are also opportunities for you to actually network with other companies who are doing similar things. In the last few classes we've had, there have always at least been 2 people who are working on something similar that might be able to, work together. So that's good.
All right. Thank you so much, Maureen, for taking our time this morning to be with me on this call. I think it's been very, very informative to understand what these different kind of Reg A+, CF, and D are doing, basically.
Right.
With a good US view on regulations and how people can start raising money using these laws as it is. I hope to see you soon in Dubai, face to face again, and talk about more things which are happening on the ground. I wish you a wonderful day, and I hope to see you soon, Maureen.
All right, thank you so much, Prem. I hope to be in Dubai soon as well.
All right. Thank you.
Thank you.